Have you noticed your weekly shop or energy bill creeping up lately? Maybe you're finding that your money just doesn't stretch as far as it used to, even though you're buying the same things. It's not your imagination. The cost of living is rising, and it's affecting households everywhere, no matter your income or lifestyle. From groceries to petrol, prices are quietly climbing, and it's hitting everyone's wallet. Everyday essentials are becoming more expensive, making it harder to save. The real problem? While prices go up, your savings often don't keep pace. Your hard-earned money loses value over time if it just sits there. If your money sits in a standard savings account, inflation is likely eroding its value faster than you can earn interest. The interest rates just aren't enough to keep up. It's like walking up a downward escalator. Stand still, and you're actually moving backwards. Even if you're saving, you might still be losing ground. That's why it's no longer enough to just save. We need our money to work harder for us. Investing and smarter saving strategies are more important than ever. The goal is to protect the real value of your cash, so your efforts today provide real security tomorrow. It's about making sure your savings grow, not shrink. The good news? There are practical ways to fight back, even if you're not a financial expert. With the right approach, you can outpace inflation and build a more secure future. The culprit behind shrinking savings is inflation, a force that quietly chips away at your hard-earned money, often without you even noticing at first. Inflation is the steady rise in prices that makes your money buy less each year, affecting everything from your morning coffee to your weekly groceries. Imagine last year's £10 note buying 2 coffees, but this year it only gets you 1.5. Over time, this small change adds up, making your money stretch less and less. Inflation is measured by the Consumer Price Index, which tracks the cost of a typical basket of goods and services that most people buy regularly. If inflation is 3%, you need £103 today to buy what £100 bought last year. That extra £3 may not seem like much, but it adds up over time, eroding your purchasing power. This slow erosion is especially tough on savers. If your account pays 1% interest, but inflation is 3%, you're actually losing money in real terms, even if your balance grows a little. It's not just about big purchases. Inflation affects daily choices, from holidays to meals out, and even the small treats you enjoy. For those on fixed incomes, like pensioners, the squeeze is even tighter, making it harder to keep up with rising costs and maintain the same standard of living. That's why it's crucial to look beyond traditional savings and find ways to grow your money faster than prices rise, so your wealth doesn't fall behind. Understanding inflation is the first step to protecting your financial future. The more you know, the better prepared you'll be to make smart decisions. The challenge is clear. Find strategies that help your wealth outpace inflation. Let's explore how you can take action and stay ahead. The old advice, work hard, spend less, save the rest, doesn't cut it anymore. With low interest rates and high inflation, savings accounts often lose value in real terms. If your savings earn 1.5%, but inflation is 4%, your money's buying power shrinks every year. That's why investing matters. It's about putting your money to work in assets like shares or bonds that can outpace inflation. Yes, investing carries risk, but it's one of the best tools to grow your wealth over time. For retirees, investments can provide regular income. For younger people, reinvesting that income can supercharge growth. The key is finding investments that offer both growth and income to build a robust financial plan. Investing can seem daunting, but platforms like Hargreaves Lansdown, HL, make it accessible. Think of HL as a financial supermarket, offering a wide range of funds and shares, plus research and tools to help you choose. Their user-friendly website and expert analysis, like the Wealth Shortlist, help narrow down thousands of options. HL doesn't give personal advice, but it's a great starting point for your own research. Today, we'll look at 3 funds highlighted by experts for their potential to beat inflation and generate income. Each follows a different strategy, but all aim to protect and grow your money over the long term. Let's see how they work. First up, the Trojan Income Fund. Ideal for cautious investors who value stability. The fund focuses on large, high-quality UK companies with a history of paying regular dividends. These are household names, food producers, pharma giants, consumer goods, providing a solid, less volatile foundation. The fund's priority is steady growth and reliable income, not chasing risky trends. Dividends are paid out to investors, offering a growing income stream that can help offset rising living costs. It's popular with retirees and anyone seeking peace of mind, but also works as a stable core for younger investors. The Trojan Income Fund is all about resilience and steady, long-term growth. Next, the Artemis Income Fund, a more adventurous option for those seeking both income and growth. The managers hunt for undervalued companies with strong potential, including medium-sized firms, not just blue-chip giants. Their blended approach means looking for bargains with quality, aiming for both rising dividends and capital growth. The fund is diversified across sectors, spreading risk and seeking new opportunities. It's suited to investors comfortable with a bit more risk in pursuit of higher returns, perhaps those building a pension pot or with a long-time horizon. Expect more ups and downs, but also the potential to outpace inflation and build wealth. Artemis offers a dynamic way to grow your money. Finally, the City of London Investment Trust, an investment trust with a remarkable record. It's increased its dividend every year for over half a century, through all kinds of markets. The trust invests in major UK companies, focusing on stability and reliable earnings. Its manager, Job Curtis, has steered it for decades, favouring strong, cash-generative businesses. Unique to investment trusts, it can smooth dividends, holding back income in good years to pay out in leaner times. Lower costs and a proven track record make it a cornerstone for income-focused portfolios, especially for retirees. For those seeking stability and rising income, it's a compelling long-term choice. Investing offers the chance to beat inflation, but it comes with risk. Unlike savings accounts, your capital isn't guaranteed. The value of investments can go up and down, sometimes sharply, due to company news, industry changes, or global events. Don't panic during market dips. History shows markets recover over time. Each fund has its own risks. Troy may lag in booming markets, Artemis can be volatile, and City of London is tied to the UK economy. Always read the key investor information document to understand specific risks. Manage risk by diversifying. Spread your money across different funds and regions. The longer you stay invested, the more you can ride out market ups and downs. Investing is a long-term game, not a get-rich-quick scheme. We've covered the challenge of inflation, which can quietly erode your savings and make everyday expenses feel heavier. And we've explored 3 practical ways to fight back and protect your hard-earned money. The key takeaway is this: you have the power to take control of your financial future, no matter your starting point or current situation. Begin with research and set a clear, achievable goal. Whether it's saving for retirement, building a house deposit, or simply gaining more financial freedom and peace of mind. Use platforms like HL to compare different funds, read up on performance charts, and make sure you understand the risks involved before you invest. Decide your risk tolerance. Are you cautious like Troy, preferring stability, or adventurous like Artemis, ready to embrace more ups and downs for higher potential rewards? You don't need a fortune to get started. Many platforms let you invest from as little as £25 a month, making it accessible for almost everyone. Regular investing helps you build discipline over time and smooths out the bumps of a sometimes unpredictable market. Consider tax-efficient wrappers like a stocks and shares ISA to help boost your returns and keep more of what you earn. If you're unsure where to begin or need guidance, a financial advisor can help tailor a plan to your unique needs and goals. The most important step: take action. Start now and make your money work for you, setting yourself up for a brighter, more secure future.